Today, a quick Credit Suisse update. Hello again, it's Martin North from Digital Finance Analytics, one latest post covering finance and property news with a distinctively Australian flavour. Well, Credit Suisse is the company that keeps on giving with more news about their potential future. Credit Suisse is rumoured to be considering a sale of its US asset management business, and the firm's investment bank chief is set to depart as the company nears a strategy revamp that's likely to reshape the business and its top ranks. The Swiss bank has recently begun a sales process for the US operations of Credit Suisse Asset Management. The unit, which includes a platform for investing in collateralized loan obligations, is expected to draw interest from private equity firms. No final decision has been made, and Credit Suisse could opt to hold onto the unit. Christian Messen's departure is expected to be announced on October the 27th, along with the bank's strategic review. The banker, who has been focusing on the overhaul of the investment bank, is looking at options, including starting his own advisory firm or joining another institution next year. Credit Suisse is in the midst of a critical strategic review after multiple missteps drove the bank's share price to record lows. The future investment bank is at the centre of the company's turnaround plans and expected to be significantly pared back or even split up. The main question is how the bank will pay for any restructuring, leading to consider unit sales and spurring outside investors to weigh injecting funds. Abu Dhabi and Saudi Arabia are mulling whether to put money into Credit Suisse's investment bank and other businesses to take advantage of depressed values. The oil-rich emirate and its Gulf neighbour are separately exploring potential investments through sovereign wealth funds. A deal could also come through other vehicles in which each country owns significant stakes. Deliberations at a very early stage, and it isn't clear if they'll lead to firm offers. Potential investors are wary about the risk of future losses or legal issues. And Credit Suisse has long counted on wealthy Middle Eastern investors as top shareholders, including the Qatar Investment Authority and Saudi Arabia's Alliance Group. They're often invested in times of need, including the QIA's participation in Credit Suisse's approximately $2 billion convertible note of April 2021. That helped shore up the balance sheet after Archelaus. Separately, Credit Suisse has gauged the QIA's interest in investing via a capital injection or stake purchase in one of the units. A representative for QIA, though, declined to comment. We have said we will update on progress on our comprehensive strategy review when we announce our third quarter earnings, Credit Suisse said in a statement. It would be premature to comment on any potential outcomes before then. With regard to the US, the bank said that the Americas account for 146 billion Swiss francs, $147 billion worth of its assets under management. And the company's shares rose, although they still have lost half their value this year. And Bloomberg reported earlier this month that the bank is seeking to bring on an outside investor to inject money into a spin-off of its advisory and investment banking businesses. A separation of the deal-making and underwriting unit would effectively break the troubled investment banking division into three pieces, with Credit Suisse keeping a shrunken trading unit while hiving off its securitized products group and other assets it wants to offload. Messner's departure will be part of the changes. So you can see there's a whole bunch of stuff going on around the place, and I do think that the markets are still going to be wobbling some more ahead. There are so many big picture questions to consider, and of course even those like Credit Suisse in turn have a sufficient weight to be able to shake the broader markets if they make a misstep. So my own view is simply this: we are certainly not out of the woods yet, and it could well be that the thickest part of the forest is still ahead of us. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.